So wait until the bar ends.
Okay, it's loading. So much for that.
And then once it's done, you click on the X on the browser. Wait for it to hold on. Okay, what you see? Okay, now you click on the X.
Okay, it's loading. So much for
Yeah, that one, yeah.
Okay.
All right.
Okay, I guess we are here. We are live.
Okay. Click on pause. You're good.
So welcome to the Measure LV Citizen Oversight Committee. Today is October 5th, 2021. It is 4:03, a little late, but we are here. For today, I'm Marla Pendleton. I'm the Director of Finance for the City of Laverne, and I would like to take roll call to see who is here. So, Chair Annaby.
Yes, I'm here.
Okay, Vice Chair Carney,
I'm here.
Members Chang,
Here.
Simison,
Here.
and Ingalls.
Present.
Okay, everybody is here. First line of order. So public comment, and I don't know if we have any public comments at all. I'll have to check. Actually, let's wait towards the end. If there's any public comments on any items that are not on the agenda, but we are basically going through today where we're at with our funding for Measure LV. We have 3 agenda items, past agendas that do need to be approved. And I'm sorry, I'm not necessarily going in the order. But we have 3 past agendas that need to be approved. I'm hoping everybody's reviewed those. And do we have a motion to accept those? So it looks like
Make a motion to accept.
our city clerk is calling us. Yes, Lippy?
No public comment.
No public comment. Thank you so much. I appreciate it.
Bye.
Okay, bye-bye. Okay, so they are listening. Okay, no public comment. We're good. We don't have to go back to that. Okay, so for the 3 agendas, do I have a motion to approve those? To accept
Yes,
them?
motion to approve.
Okay,
Second.
okay, second by Jane. Okay, and let's vote on accepting them. And I guess we're videotaped, we're all shown, so should we do a vocal or we could do a hand? Let's go ahead. Chair Annaby, do you
Yes,
accept them?
Yes, I do.
Okay. Vice Chair Carney?
I approve.
Okay. Member Chang?
Approve.
Member Simison?
Approved.
And Member Ingalls?
Approved.
Okay, so motion passes 5-0. Next on our agenda is our review of the revenue. And actually, I'm not necessarily going to go in order with these. I'd like to go over our current year revenue and let you see that. So I am going to share my screen and go over to the actuals. Can everybody see my screen fine?
No. Okay, wait.
There you go.
Can you see it now?
Yes.
Okay, let me go with actuals because it looks like I'm on the wrong page. Okay. So what you have before you is the estimates of our revenue and expenditures for fiscal year 2021 for Measure LV. If you look at the second column, the first one with numbers in it, that is our original estimate back in June 20, where we estimated we would have approximately 2.7 million in revenue. We estimated the personnel costs would be 974,000 for an excess of about 1.5 million. I'm not giving you exact numbers, just rounded. So that's what we originally estimated. We revised those estimates in June of 2021 to increase the revenue. At that time, we thought it would be about 3.3 million. The projected personnel costs were rounded to 862,000 for an excess of 2.4. We have now closed our fiscal year. We are undergoing an audit, so these are unaudited financial statements, but for fiscal year 2021, our revenue actually came in much higher. Our revenue is $4,042,543 for the fiscal year, which is pretty awesome compared to where we started. The actual cost, $843,770 for an excess of $3,177,773. So quite a bit more, 1.4 million over our original estimate that we have excess for the fiscal year. So in our last meeting, one of the questions was, how are these projected costs, or these costs, general fund versus other funds? So I do have a slide that shows where that $864,770 expense for the current year was arrived at. So if you look at the first column, it shows our budgeted salary and benefits. Grand total, $30,970,179. The personnel costs prior to that, that are subject to it, is $30,556,000. The actual increases during the year that has to do with salary benefit increases is that far end column, column D, and that's actually our cost of living increases. So we have the base salary of $538,222, additional pay of $24,404. That could be overtime or some type of special pay. And then our health benefits, which is $302,144. So the total is $864,770 that were covered by Measure L this year. So looking at that, how does that break down by the funds? So the majority of our funds are general government, general fund, but we started by showing our major public safety costs that were covered by Measure L. So we have police of $336,032, fire department, $247,446, other general fund departments, $86,930, and then other funds, that includes things like our enterprise funds, water, sewer, or any other type of fund that has salary benefits in it for the city. That's $194,363 for our total cost of $864,770. So that at least gives you a little bit of explanation where Measure LV funding went during the year. Okay, so I'm hoping that covers that for you. Okay, to our 10-year projection. Am I going too fast for everybody? Well, we'll discuss it, I'm sure, afterwards. Our 10-year projection, we now have actuals for year one. And again, that is our $4 million revenue, 865 roughly of personnel costs to come up with a excess of $3,177,773 dollars. I'm sorry. So measure 2 through 10, and I mean year 2 through 10. We're just projecting 10 years out, but we know we have established that Measure LV, like sales tax, is something that is not a time sensitive thing. It is indefinite. It was voted by the taxpayers, but this is just giving you a projection of what we anticipate personnel costs to be versus our projected revenue. Year 2, we're estimating 3% increase. And then year 3 to year 10, a 2% per year increase. So we took our actual numbers for year 1 and just increased the other years by that amount. And then the projections is cumulative for the personnel costs once it's funded. If there's other increases or changes to our personnel costs, that'll be compounded, because whatever increases that happen this year, let's say we had a salary increase of 2%, that's ongoing. So every year, any type of increases or changes would be added on to that. That's why you're seeing the escalation in the personnel cost versus the measure LV funding. So based at this rate, looking at our sales tax and our projected expenditures, measure LV will be positive and fully fund all the cost for 5 years. After that, it will partially, year 6 onwards, it will not completely cover increases in personnel costs at that point. So that's where we're at this moment. Looking at just the revenue projections, again, this is where we came up with, here's our actuals for year 1. Year 2, if you can see it, is a 3% increase. Year 3 through 10, estimating a 2% increase, coming up with our grand totals. So at this moment, that's where we're at. Do we have any questions or any further discussions?
I have one. You said that some of the salary increases that the measure covered, some of those were in the water department?
Well, it's other funds. So this is our grand total. So other funds would be any type of other thing. I mean, you know what? I made that comment, and honestly, I'm getting, Mark, I don't think has been able to get on. He's the one that put the projections together, our interim. Usually other funds includes enterprise, but in this instance, and I don't know if Christy knows, I wouldn't think our measure LV would be covering enterprise funds, because enterprise funds charge the public and they're supposed to break even based on that. So honestly, I need to check into that to make sure what fund is included in that.
Yeah, that was the reason for my question, because I know
Yeah.
there's a fund that usually covers the salaries of water department employees. So that was my question, and that was my thought. So.
And that I need to find out his numbers. Christy, do you know? I know you were on.
Yes, it does not include enterprise funds.
Okay.
I'm not sure about the breakdown, and I apologize, I didn't put this together. But when we were doing the budget, we made sure to exclude enterprise. So it should just be anybody who is funded with general fund.
Another question I have, police department employees, are there any police department employees that are covered by asset forfeiture funds?
So we would have excluded that as well. Right now, though, with asset forfeiture, we have shifted the majority of those expenses that are actually covering overtime.
Right.
So we currently have one backfill position, yeah, we also made sure that we excluded that when we were determining the totals.
Perfect. Thank you.
You're welcome.
So I'm
Just
sorry,
a comment.
This got created about an hour ago and sent to me, so I apologize for not having all the details of it. But if we need to find that out and get that information back to you, I will do that. It just says other funds, and for the most part, ours are enterprise funds. But after I made the comment, you asked the question, I do realize none of the funding should be general fund for our enterprise funds, nor should it be covered by Measure LV. So
Perfect. That's my.
Thank you so much for bringing that up, though.
No problem.
Do we have any other questions or comments?
I think you probably answered it. I just wanted more, a better breakdown of what other general fund and other funds is.
And I don't know if I've got anything. I don't think I do, because Mark had put this together and there was a detail, but that didn't have all the funds on it. It had more of the types. So I'm not completely sure how it came together. And actually, I've got Mark right now on the phone. He probably can't chime in. Mark, hi.
Marla, am I the problem? Is there something, are you guys waiting for me or?
No, we're on. So I don't know. Is it a map? Everybody, I've got you right now. Okay, wait, I'm admitting you.
Oh,
It's me, because I'm not coordinating things well enough, obviously. Are you on now?
I'm on
Yeah,
now.
there he is.
There you go. Now you can chime in on this breakdown of functions.
Hey there. Hey, everyone.
Hi, Mark.
How's everybody going? Thank you. Most importantly, thank you for getting started and keeping on going. So
I'm
don't let me
sorry.
interrupt, and I'll chime in when I can.
Okay, so we already went through everything. The main questions are on the breakdown for fiscal year 21-22. What is included in other funds? What departments are costs? The 194, 363 that's up there right now?
Most of the other funds is the enterprise funds that the city has, the water and sewer, and there's a little bit of salaries in some of the. Christy, you're on. You can help me. Some of the maybe like LA Impact.
When we determined the budget, and I apologize, Mark, I'd have to look for it, but when we determined the budget, the $864,000 was just general fund. We weren't shifting any expenses, because this is Measure LV. We weren't shifting any expenses.
Oh, okay. So then that's not the
Yeah,
enterprise.
so I'm not sure where this breakdown, what this breakdown comes from. So I apologize, but
Would it possibly be the city yards, parks and, the mechanics?
yeah,
and
it's possible that it's other departments and
Oh, it-
not other general fund, because really just looking at those totals, just from the amounts of the increases, it looks like it would be the other departments, but again, I apologize.
Yeah,
I didn't look at it, but I do remember us specifically excluding that when we were looking at the budget. We pulled out
okay.
just general fund.
Just the general fund. Okay. So then it's just the other, some of the smaller funds, some of the smaller other funds that we've got a little bit of salaries in.
It might be more like a division or the department, because we have police and fire separated out.
To me, it looks like it'd be Public Works, because that's a very large department and I can't see that being another general fund. So it'd have to be a very large department compared to police and fire. So we're going to have, bottom line is we need to look into that and get back to the committee, let them know exactly what's included in that number.
Yeah, my main concern is we are not funding enterprise departments such as the water department, et cetera.
And we definitely are not. I believe that was just maybe a title or, labeling error would be my guess. Because we definitely made sure that we separated out the general fund in the budget. So in the personnel document, we can pull out just those specific funding sources.
That's fine. Thank you.
Yeah.
Yeah, we'll get back with more specifics, because I don't want anybody questioning that it was inappropriate. And if it is, we need to make sure we adjust it. So we will definitely look into that and get back to the committee so that they know exactly what that number represents.
Fine.
Okay, I have a question. So your Excel spreadsheet with the extra data, is there a way in the future or even now that we could get copies of that to attach to our agenda? Like you did include the summary, but could you also include your back pages for information so we don't have to scribble it down while we're talking?
No problem. In fact, I can email this to everybody when we get off.
That would be great.
That way,
And-
don't worry about having the detail and know that the other funds, we will look into that and get back to you.
Okay.
I put all of these four just on one spreadsheet, so I'll send it to everybody.
Okay, so when we had our last meeting, we were talking with Mark, and we believe we were asking for a little bit more breakdown, and I do see you broke it down to fire and police and stuff. And I was wondering, do we get P&L with a financial statement that we can actually see the expenses in and out, how much is in the savings account, how much is being spent, and we can do an annual financial statement? It's easier for me to read and understand exactly what's going on in the funds that we're using in comparison to the generalization, which now we don't have the information of what it actually is.
Well, Measure L, the fact that, LV, the fact that it is more general revenue, it is actually in the general fund. So that's where we account for it. We would have to break it out. And as far as all of these costs, it's in many different budgets. So this is a summary of where it is through the entire financial system. There isn't a separate fund or bank account for it.
You don't have a line item just for when the funds come into the bank. You don't have any of that line item anywhere on the P&L?
We have Measure LV as a revenue source, and that is in our chart of accounts under that revenue. So that, yes.
But you don't break it down by expenses against that revenue when you pay the expenses?
The expenses are under salary and benefits, all the different accounts being salary, being PERS, tax, Medicare.
We actually,
so how do you know?
Sorry, can I just interrupt real quick?
Yeah.
We actually did start a new fund for that in 2022. So
Okay.
it will have its own fund. It is part of the general fund, but it will have its own fund. So we will be able to see the revenue in that fund and the expenses. It is, however, pulled into the general fund in our financial statements.
But
So
if
you'll
you're
be
doing
able
a
to see it
general
in the
ledger,
budget.
yeah, if you're transferring general ledger, at least you're sending it over so you can run it in exact information, because I think a lot of us would learn a lot more of how the funds are being used and be more comfortable. I don't know. I just like looking at a P&L or an income statement.
Yeah, but you know what? I think
It's cost accounting.
well, but we're not set up that way, and so this Measure LV revenue is not a specific revenue that is in a P&L for a department or a division, and then you see the expenses that are tied to that. So if you're thinking of that concept, that's not how the city is set up. There's multiple funds. The Measure LV is a revenue source, one of many revenue sources that go in, are distributed to balance all of the different funds, obviously the general fund being the biggest.
Mm-hmm.
But there is not a direct tie in a P&L that says Measure LV revenue and it's compared to salaries, benefits, and such. So what we would give you as a monthly P&L would have nothing to do with looking at where's the Measure LV revenue going, because it's not set up that way. So probably the closest, well, see, because Measure LV is not funding salary and benefits in total, and that's what the P&L is going to show. Measure LV is showing a cost increase, a proposed cost increase for that year that would go to salaries and benefits. And
So it's not actual numbers, it's a
it's a piece of a number. It's a piece of a number. And if you look on the screen on that 865,000, that's an additional piece of the overall $20 million of salary and benefits that is throughout the city and all the different funds. So there's no line item that's going to say, well, here's the cost of 865,000, and then here's the revenue that, and we're matching that, because this salary and benefits is not a specific line item. It's a
Okay,
piece.
I get that.
Yeah. So,
But then- So is it just a subtraction from the general fund spent? And then you decide a number that's being allocated to it and you post it against the income?
No.
no,
Would be a
we,
transfer.
How do you figure the number if there's not a entries?
how do we figure the 865?
Or the $336,032 for the police department? How do you know?
Oh, okay. So all I did on that, so that was just taking, looking at the budgets for the police and the fire, overall to what's budgeted overall in salaries. And those numbers are just the percentage based on the 865. So looking at the budget for the current year, PD's, 40%. So I just rounded and said, okay, well, 40% of the 865 is going to go to fire. And then looking at PD and then looking at fire's budget. So it's just a kind of a 30,000 foot view of kind of how much costs are going, because there was a question raised last time about, well, how much is going to the general fund and fire and police. So I thought I would just kind of break that out. So what's going to happen when I change this and take out those other funds, meaning thinking that they were going, you dancing, Christy?
Yes, yes.
Okay, good. You're back.
Saving power.
So by removing those other funds, which were the public works, which I knew there were water and sewer, that's what that's going to do when you get this revised sheet. All those other three numbers are going to bump up. The police is going to go up, fire is going to go up, and the other general fund are going to go up. Now that I know that I forgot that it's all general fund. So that's how those numbers are derived.
So you're allocating based on a percentage, not on actual cost for an audit sense, if we're an auditing company, committee.
We're not allocating anything. This is just, I just try to do a kind of a simple breakout of what the 865 is.
Right, I appreciate that.
Okay, so the actual allocation is all of the departments have specific employees in that division with a salary and a benefits and all that kind of stuff. And so when we budgeted the cost, it's based on all of those people and their salaries and everything in all of the departments. So it automatically gets like say there's a 3% increase, all of those numbers will go up by the 3%. So it's more
3% of the allocate, 3% of the difference, not 3% of the whole. Like if your whole wages go up under the police department, we're only getting 3% of what we're already contributing. Is that what you're saying? You're just saying this is a part of the general fund and these expenses are all in the general fund.
right.
Okay, and so if they're going up over the next 10 years, it's only the percentage of that column that's going up. If it went up 3% in the general fund, so this allocation means a lot because it starts the basis for the next 10 years of the 3% increase, right?
No,
Crazy?
the allocation is really just an informational piece for you. Just because the question came up last meeting about, well, how much isn't going to fire and police and stuff, but obviously it's all the general fund. So we know what the salaries are and the benefits. And if we make the assumption that that a cost of living is going to be 3%, that's what we're going to show as here's the proposed cost for the year. And we're looking at that total number. And that's the number that's driving when we look at these projections going out. This here is just a behind the scenes, just a little breakdown of what makes up our projections in total as we're going forward.
Okay. So
It was quick
like I
and
said, it's
dirty
not
to
accurate.
answer your question is what it was.
I'm sorry?
This was a quick and dirty estimate to try to answer the question. It's not necessarily the exact numbers. It sounds like it was the exact number, but the allocation was based on the budget. Correct?
Right,
Yeah.
but the budget changes so much.
I think from an oversight committee view, and I'm not an accountant, so I'm probably the least knowledgeable about some of this, but based on how it was sold, the tax, it was all going into the general fund. However, there was going to be monies for it to cover police, fire, some of those expenses. I think we need a little more specifics as far as how this is all being allocated. And I understand kind of what you were saying, Mark, but I think, like the other general fund and other funds, I don't know what that is. And neither is anybody else. And I think we just kind of need to see, I think people need to see specifically how this is being allocated. And I don't know if you're right. You probably can't do a P&L, but I'm just thinking of this from an outsider who, I'm not an outsider, but I'm thinking of it from how the citizens are going to look at this, and they're going to want to know, how is this being really allocated? Is it going just strictly to the general fund, or is it actually being spent on the things that I thought it was going to be spent on?
Mm-hmm. How are we going to tell somebody, oh, I'm on this committee and I'm overseeing, and it's just sort of numbers based on percentages or something, based on a budget? I don't know. I'm a penny counter. Sorry, I don't mean to be. I had another question on tier 2. Can you get a line item that says tier 2? Because we did say, and it did say that we were going to have funds available for tier 2, which added some things for parks, public property, emergency response, some of the little extra things that we were trying to talk about last meeting, that is something the community can actually see that doesn't go to the general fund only. We were talking about that information.
So again, I think tier 2 is something that just continues, that just needs to be continually talked about. I don't know.
Can we give a budget to tier 2? So we can say we have $50, say we have $10,000, say, is there something in that line item? Because tier 2 is, like we talked about last time, is just, we have to give the community something besides, and it's such a small amount compared to the millions that are coming in. We're not asking for a lot, but there's got to be something that we can go, this is also for you, the community at large, as far as an enhancement or something we could never afford if it was just in the general fund. But because we have these funds, here's something back to the community. I don't care if it's through Parks and Recs. I don't care if it's the canine dogs. Yeah, I know I throw that in, but that's just a great example. I don't know if there could be at least a budgeted line item for tier 2, and then we can start coming up with some great things to spend it on.
I know in the last oversight meeting, Bob talked a little bit about the process and how tier 2 monies would potentially be available through the budget process, as the city manager went through with departments on funding needs and allocations and monies, if there were projects, one-time expenditures or things like that were needed that potentially could be funded with tier 2 money. So I think that's where the nexus was going to be. What I'll do is I'll circle back to Bob. Marla, you and I, we can circle back to Bob and let him know that the board's looking at potentially if there can be something at least broken out.
It's right here, and I thought, well, if it's right here, it's in our
allocated
spending guidelines. At least we should have a line item in the budget for it.
Well, Bob and I have talked about it, the number one priority is the funding of any salary benefit increases. If you look at what potentially could be tier two, it would be on this 10-year forecast where you look at the bottom line where it says excess sales tax reserve for future years. This could either be used for as it starts building because there's excess each year. It could either be partially used for tier two, of which we would put another line item in here if it's determined it's going to be used, or it could be, of course, carried forward to future years. And that was something that we intended to discuss in our next meeting, because then we'll have audited financial statements. We'll be entering the budget process to see what the needs are. And then it would be a discussion, from my understanding, a discussion in the next meeting, what would be available potentially, and then what would the recommendation of this committee be for that use. So I believe that's a future discussion, but it is potentially, it could be this excess sales tax reserve for future years. That could be either future year tier one or tier two at any individual year. So,
And I'm not,
as you're seeing, it is building, then it's starting to where the personnel costs are higher than the revenue. It starts going down, but then the question is, are we going to use some of that for tier two in the intermediate, or would it continue to go for future year tier one?
okay.
It
I'd like
is-
that. That'd be good to have it at least part of the spreadsheet. Are we doing any strategies in the 10-year strategy that you're looking at how we're not going to go in a negative? Because if I'm running a business and I see 10 years down the line, now I'm out of business. What are we doing to decrease expenses or increase sales?
We don't really have, well,
You're not a business.
increased sales is not something that we have control. Well, we have control over as the city, obviously, in trying to increase our sales tax base. So that's always obviously something the city's always trying to do. When it comes to the costs, these are basically calculated based on the salaries and based on potential cost of living increases that are given to employees. So it's got you have to kind of run that fine line of trying to be competitive and not, giving too much in salary and benefit increases. So there's not a whole lot of different options, that we can do to kind of change these costs. Obviously, city's always looking at personnel, number of personnel and staffing and trying to maintain our personnel costs.
Mhm.
But
even though the projection doesn't cover the entire cost, it still covers a portion. So it's not like we're totally out of business. So, but it's certainly a negative is not good. Hey, and help me to understand. I thought any projects or expenditures had to come from the city council to the city manager and the budget process. In other words, this committee is not permitted to say we're going to spend money on a K-9 with the police department or something like that. Is that correct?
It's an advisory. So it could be that you make recommendations, but yes, the final approval always rests with city council and their vote.
Okay, perfect. Thank you.
Thanks, Ron.
Okay. Any other questions?
Do you mind one more thing? If I compare our sheet from June to this one, it's still, we were bringing in less money, spending similar, but we're still running out of money in year 10. That's
Let's see.
funny. We're getting so much more money.
You're talking about here on this?
Yeah, because I'm looking at our old 10-year forecast that we had, the first, our meeting in June. And then and it says in the year 10, we were at a loss.
Which we
Right.
are here.
And it's the same, so we're getting all sorts of more money. I mean, if you look at our original forecast, you had 2.7 million and we brought in 4. And granted, we have a more excess to pass forward, but it didn't really change year 10 going into debt. So that's why I don't understand where the expense line is going.
The personnel costs are greater in this worksheet than the one that you're looking at from prior.
So we put more in, we took more from the general fund expenditures and put it over into this fund.
No, we're not taking from one pot and putting it into another. We're just revising. We're revising and always updating what the potential cost increases for salaries and benefits. It has nothing to do with moving money from one pot to another. It's recalculating what our potential cost of living increases are, include the salary and the benefits and such. So those numbers went up.
Are those a year ago numbers? Are these a year ago? I remember I just joined in June. Was this put together in June or was this put together last June? This one, or the one you gave us last time?
That was put together before we did our final calculations of what we're looking at for the.
Right, it's our first year, I understand.
Right.
Okay. All right.
And I don't think the projections of increases have changed. The only thing that changed is year 1, we now have actuals and the percents went from there.
Okay.
Is that correct, Mark?
Yes.
Because I think we still had 3% and then 2 for revenue, but we just replaced it with actual. And then personnel cost actual, and then projecting out the increases with the workforce and making it cumulative.
Right.
So yes, things change because we now have actuals and everything else is based on that.
Right, so the first year was actual projected personnel cost increase was 761, and now you're at 864. So we're up 100,000, and then the next time you're up 100, and it goes, and then it gets to 2% on top of the 100 all the way down.
Correct.
Yeah, I was just hoping to stay in the black.
A quick question, the 864,000, that's primarily salary increases that were negotiated this past year. Is that correct?
Yes.
That's what I thought. Thank you.
That was from over here. And this is where this is the increases here. And this was based on the MOUs for all the bargaining units. And there were increases across the board in salary.
And some of those included back pay, did they not?
No, they did not. They were all for the current fiscal year, and we made them effective going forward, not going back.
Perfect. Thank you.
Mm-hmm.
Thank you.
Okay, so no other comments?
One last comment.
Yes.
It probably is repetitive on what they have mentioned earlier. I think from the past, since we started the committee, I think if we could continue to improve the details of the report, so that the committee can really better understand the numbers, and we can better comment on it. Even though we are an advisory board, but I think that's the function of the advisory board, is to propose and advise. Obviously, the final decision will belong to the council, but at least we can discuss in the meetings about what could be done, right? Like Jennifer mentioned about the tier 2, so we probably could allocate another line item for tier 2s, utilizing the excess. I know the excess won't be enough, but that obviously number will continue to change, because I was doing the numbers on the increase. It's pretty high increase year after year on the budget and the cost. I don't know if we are doubling our personnel or we are doubling our benefit or salaries to our people. It just numbers seems to be, increasing, at a very high level. And I know this is just projections, but normally when I run my business, when I request my CFO to run the numbers for me, I mean, this number is for me just without understanding what's behind it. Maybe there's a reason for it. It's just, it's just not acceptable that we're gonna be running out of money, in 10 years or in less than 10 years.
Well, just say the personnel cost increases have nothing to do with increasing the number of full-time equivalents. It's the existing workforce and the negotiated increases. So there are, so if you look at year one, 3% was pretty, some of them were a little bit higher once they actually came down to having the agreement, but 3% was pretty much what was given to every bargaining unit. And if you look at year two, it's the increases from year one plus now the increases for year two. So those aren't one-time increases that are in the personnel cost, it's cumulative each year. Because once you give an increase, it stays there.
Of course, you're increasing.
So that's why it's escalating. It's no increases in personnel though.
Of course. So, and that's my point. Without knowing, really the actual budget from the P&L that we are not seeing here. So it's hard for me to see whether the increases make sense or, where that increase, really going into. And as Mark mentioned, it's hard to make a line item. This is just my comment, right? My experience. We could, because the purpose of LB fund is to make up the difference. Please correct me if I'm wrong, right? But if I read the purpose and intention of the whole LB is to make up the difference, the shortage of the proposed budget that's gonna be coming out from the general fund. And if that's the case, then we'd like to know what exactly is the general fund spending it and why is the increase. So that would help us to match better the numbers.
So can I chime in with two things? First of all, Marla, can you go to that other sheet, the one that little summary one that was
summary page?
Yes, please.
Let me see if I got it to pull it up because I didn't attach it to this one.
I thought you had it on the screen before, didn't you?
Oh, you want it on? I'm sorry, you want it off of which one do you want? Yours? This summary? This one?
Yeah, that one.
Okay. Yes.
Yeah.
Right.
Okay. So Kenny, to hopefully answer your first question, if you see that middle column where it says it's the personnel costs subject to the Measure LV, and it's got those three categories. Okay. So the personnel costs for the city are $30 million. So there's a lot of money that goes to salary and benefits. So doing the based on the 3%. So it's not adding it's not doubling or adding employees or anything like that. It's just taking a 3% COLA, and that's where you get to the 865. So that really is really the crux of where do these numbers come from. It's taking a percentage of basically your 2 or 3 categories that drive what the costs are going to be that are going to be used by this Measure LV. So, we can break out the wages so it shows, police and fire and all the departments, but it's all gonna be summarized and it's all gonna come back to these numbers because it's in the budget, and depending on how many people are in police department, how many people in the fire department, how many people are in building and planning and all that, they're all just line items of this, and it's all going to come back to, it's all going to, be an estimate based on the 3% of all of these different, because these all are driven by salary, and if salary goes up, all of these other the health benefits go up because they're all tied to, they're all a percentage. So So that's how you get to that.
No, I understand this part. I think, let me explain it better. Maybe I didn't explain it well. My point is, like, I understand that all this number would come from the total wages and all that. I think the point is we would like to understand, okay, the wages, what does it include, wages could include bonuses, wages could include also the overtime, of how many personnel. Let's say the fire department, there's 3 vacancies, right? So with that 3 vacancies, if they don't fill those 3 vacancies, where is that money gonna be used since it's already allocated, right? They're gonna use to cover the, did you use that to cover the overtime, or that money just stays somewhere because it's not going back to the general funds, or
So-
it's not going back?
That's a really good question, because when the end of the year comes and all of the actual activity is all finalized, because yes, you're absolutely right. There's going to be vacancies. There's going to be different things that go on, and that's what at the end of the year we basically just true up the numbers to get what the exact numbers are. So that's why at the end the numbers are always going to be a little different than what the beginning is.
Right.
So the actual number is not going to be 865. That's what's budgeted based on if everyone worked exactly the way they're supposed to be based on the budget. So at the end of the year, it could be a little bit more or it could be a little bit less. And then that's what the exact amount of the Measure LV funding is going to be.
Right.
So yeah.
So
Yeah.
instead of waiting for the end of the year to get the actual number, so in between, with those details will help us to understand how the numbers kind of fluctuate, and I think that will also help answer Jennifer's question about, how we are looking under those numbers.
Yeah. Okay. And just real quick to make a comment on your second question about the Measure LV money is the stopgap when the general fund is trying to balance the budget. No, the Measure LV funding is directly tied to these costs. So if Measure LV winds up giving $865,000 for these cost increases, and that's exactly what it turns out to be, that has nothing to do with whether the general fund is balanced or not. The general fund could still be in the deficit $2 million, or it could be over $2 million. That's a separate issue. This is money that is a revenue piece that goes into the overall budget, but it was not intended to be a number that plugs a potential deficit as the city's trying to adopt the budget.
Right. Like I said, I don't mean the total general fund, but specifically the big pieces, right? But I will assume every year when general funds make their own budget, you also need to factor in the increases, assuming the LV was not in place, right? So
Right.
I'm just thinking, financially, right? That's logical. I mean, you cannot just expect, LV gonna be carrying all that and then you don't change anything on the items. I'm not saying the whole general fund budget, but the items on the wages to be unchanged, right? So that's why, like I said, a lot of questions might sound silly or nonsense right now, but I think because, I think a lack of some of the details that kind of caused us to ask those questions. But yeah, as I mentioned a couple of meetings before, if we could continue to improve this and get really more information.
Yeah, we're new.
That will help us automatically, like, okay, then we'll understand what's going on. Then, we won't even bother to go through those questions.
Okay, thank you.
Thank you.
I'm not against it being there for the wages. That's exactly what it's for. We're proud of it, but I don't see it as sustainable. And that scares me that we're going to get ourselves into such a high rate and then you're going to follow. It's like driving on a road, knowing the bridge isn't there, and then you just keep driving. But I'm not a city budgeter. I'm a small business budgeter. So,
but remember when this tax was passed, it wasn't intended that it was always going to have a pot at the end of the rainbow and there was always going to be additional monies. It was going to go to fund salary increases to keep city competitive. But there was never any thought that it potentially would always have a surplus at the end, because the cost increases are always going to be going higher and higher. So it was never intended that there was always going to be excess money and it was going to look like a P&L that has to have a positive
Bank account. I get it.
fund balance. It was potentially going to run out where the increases that continue to just compound would just
so does the general fund then absorb that? Is that kind of how you do it?
Absolutely. Yeah.
Okay. I that scares me. Fall off.
Yeah.
Okay.
No. I mean,
Okay.
and as city finance people, what we are doing is we're looking at this knowing if something's going to go bad in year 5 or 10 or 15, that's when the finance department works with the city manager. Go, okay, we've got a problem out 10 years.
Okay.
We got to start working on that, because we're not going to have this additional revenue, or the revenue is going to go down. And you start moving the ship sooner than waiting to that 10th year.
I would love that type of conversation in our updates. Like, you're looking at it, we feel good now, we're planning 10 years down the line, we're working into what we're going to work with the city and bring this up to the city before we just, drain the bucket. But thank you. I get it.
Absolutely.
Okay. I don't want to be in charge of a budget that's not there or something. Okay. Thank you very much.
You're welcome, Jennifer.
Okay, so we'll try to bring more detail back the next meeting. Anything else for this meeting? Okay, so our next meeting is scheduled for February 8th. That'll be before the budget time, so that you can at least see what the final numbers are based on the audit, and then we can discuss items if there's funding for tier 2 and what wherever the committee is going to go at that point. So any other discussions? If not, I'm going to adjourn.
Nice to meet you.
Sounds good. Thank you.
Okay.
Thank you, Marla.
Thank you so much. Nice
Thank you.
meeting all of you.
Thank you, Mark.
And
Thank
will
you,
get an
guys.
agenda as we get closer, okay? It
Thanks.
is
Thank you.
5:01. Thank you so much. Bye-bye.
Bye-bye.
Bye-bye.